Hey everyone, this is Rob Keens with goldsilverpros.com, and it's Tuesday, September 8th, 2020. And we're going to have a metals market report, which is going to be fairly short, and then we're going to have some fun by addressing somebody's criticism of me in an article I recently wrote. And that's what most of the video will be about. We'll get to that right after we do the report. So mogoldprice.org, I'm recording this in the afternoon about 2:30 my time, Central Standard Time, getting in a little bit early today. And we can see that gold's had a little bit of an up, silver's had a little bit of a down, but really not much coming off the holiday weekend. Not much to speak of as we look at the volume report. For September, we haven't had a big change in the overall direction of the market in gold or silver. I don't expect to, because they're not going to be super huge delivery months. And again, you can see the open interest is still there for December in both silver and gold. And that's basically it. Of course, you have some February and April action here in gold and open interest, and on silver in March, you have a little bit of action there. So somebody's really playing the long game in the silver's market. But overall, you know, not much going on since we last did a video before the holiday weekend. In terms of metal issues and stops, month-to-date delivery notice, nothing's changed since our last video. Still 3,457 deliver contracts for COMEX gold futures, and we go down here to silver futures, still 88.14. Again, nothing changes after the holidays. So it's not going to be a whole lot of data to get to. However, the one piece of data we did get to was the COTS report, the commitment of traders. And remember, in Thursday's video, I was a little frustrated because the way that they produce the COTS report, they'll give you a date that they're going to produce the COTS report, but it's looking back. So they produced this on the 4th, but it was only through September 1st. They did the same thing for the last one. It's produced on the 28th, but it's through September 5th. And this day and age of computers, this information should be available a lot faster. Just annoys me because it makes it hard to tick and tie what you're seeing in these numbers with what you're seeing in the commitment of traders. The commitment of traders is always like about a week behind. It's just kind of annoying. In any case, we're going to look at silver here and see what the changes were in silver over this last commitment of traders report. So as we look at the producer merchants, they went net short, 3,029 contracts minus the 324, so about 2,700 net short in silver. You also saw the swap dealers go net short, 2,183 minus 886, so about 2,000 or so, 2,020 net short. Managed money went net short as well, 546 over 53. And then the other reportables are the longs. These are like the wealthy individuals. They went long about 2,400 contracts. So the other reportables are going long silver at the same time. Just about everybody else is going short. So it looks like there's some wealthy individuals who maybe come in and take some delivery of that, or just take the long position in silver, maybe expecting the price to rise. We're going to go down here to the gold. And this one's quite interesting as we go to the changes. I'm just focusing on the changes here. The producer merchants went net short by almost 5,000 contracts. You see they reduced their long position by 36.58 and increased their shorts by 11.43. That's a net of about 5,000. Same thing with swap dealers, the bullion banks. They reduced their longs by 3,450 something contracts and increased 2,700. So that's about 6,000 net short position from last time. Managed money increased their long 2120 and decreased their short. So they're doing the opposite of everybody else. And then the other reportables was a net of about, I want to say, 1,000 or 1,100 contracts short. So everybody went short except the managed money. So the way it's lining up in gold is the managed money, the hedge funds, those types of people are going long in gold, or everybody else is going short. So that's basically what you're seeing, the open interest through the December data. Of course, some of that could be September, but most of it's December. So a lot of people lining up expecting a gold price to fall in December, where the managed money is expecting it to rise. And then in silver, we'll go back to that one and talk about that real quick. Going back over it, most people are going short here, except for the other reportables, so the big investors. So managed money going long in gold, the large individual investors going long silver, and that's your story. Everybody's made their bets, and we'll continue to track that data as it goes forward. Again, nothing interesting really to show you, just came off a holiday weekend, so the trades are what you expect to be, relatively muted, not a lot going on in the price. I'm sure that'll heat up as the week goes on. And it will continue to heat up as we get into December, where that big open interest position is there, and we'll see how many people are going to deliver when we get close to beginning of December month. The real fun is about to start, however. Somebody came out, another YouTuber, big YouTube channel, came out and criticized my understanding of the CME market, mostly how to read these numbers on deliveries and open interest. And I addressed that and other criticisms they have. Stay tuned. This one's going to be a lot of fun. Okay, so now I want to take a few minutes to address something that another YouTuber has criticized me for, an article that I wrote on FX Empire about these shadow contracts. And that article is called COMEX's Gold and Silver Futures Market Trade Data Not Adding Up. And by the way, this didn't just go to FX Empire. I do write for FX Empire. I was approached by their editors and they wanted me to write gold and silver articles. I've been doing that for several months. Now, I did take about a month break while I was hosting my online conference. So I hadn't written anything since early August, but that was my first article back. And I was talking about the shadow contracts. Many of you following my YouTube channel know that I have 2 videos out on the shadow contracts. One I did by myself, and then one I did with Kieran Von Hest, which is known as Deso on Twitter, where he noticed the same thing, but he'd been tracking this for months. But that article went out not only on FX Empire, as you can see here, it went out on Yahoo Finance, and it also went out on Seeking Alpha, where I've been a writer for about 10 years and been covering the precious metals for 10 years. As many of you know, I haven't been a YouTuber for very long, basically last year, year and a half, and only really heavily this year. I'm primarily a writer by nature, but because I felt as though some of the outlets I was writing for were becoming more close-ended, I started doing video and did my own website, goldsilverpros.com. That's why I'm more active on YouTube than I have been. But I have been covering gold and silver for 10 years, and we'll get back to that here in a moment because we're going to address one of the criticisms Bix had, apparently not knowing who I was. Not that that matters to me, but apparently it mattered to him. Anyway, going back to his video, he's going on a bit of a rant for 2 or 3 minutes here about this article. And he points out something that I think is potentially very valid, although no less damning, about the situation with data reporting on COMEX. He points out that as you get into the article, I'm going to go down here and look at one of my screenshots, and I'm talking about shadow contracts, or basically where you have a gold delivery, but it doesn't show up in open interest. And the point that Bix is making is that it is possible to settle a contract on the same day, and therefore the contract wouldn't go into open interest. And that's entirely possible because I've been looking all over the CME Group website and I cannot find anything that defines open interest as a contract needing to be open for at least a day. Now, the way that they do define it is as a contract that's open. It's an open contract, not settled. So we're going to go to the glossary and we're going to look at the definition of open interest right from the CME Group website. They call it the total number of futures contracts, long or short, in a delivery month or market that has been entered into and not yet offset or fulfilled by delivery, also known as open contracts or open commitments. Each open transaction has a buyer and seller, but for calculation of open interest, only one side of the contract is counted. Now, they don't say how long it has to be open. They don't say it has to be open for a day or a week or whatever the case may be. But Bix is indicating here in his video that I could be wrong in my chart because you could have had somebody come in and demand same-day delivery. That contract was allowed for same-day delivery and it was delivered on that same day. Therefore, it wouldn't have fallen into open interest. So if somebody came in and said, a wealthy investor or a producer that needs gold and silver came in and said, hey, you know, I want 100 ounces of gold. I'm going to settle this contract same day and find somebody willing to do that and give up the gold. That could be entirely possible. And if you look at the calendar, the gold futures calendar on CME Group, I've highlighted September here. You can do trades during that month, which you take in delivery. So for September, you can implement a trade all the way up to the 28th of September, and you can take delivery as late as September 30th. Now, the CME Group, on a lot of their internal pages, I've seen them discuss how long it takes to provide delivery. And a few weeks ago, I think I had a nice little PowerPoint presentation for them, which outlined the process for first intent notice to the last delivery day of the month. So you can look back in my videos for that. It takes about 1 to 3 days to actually settle that contract. So the question then becomes, if it takes 1 to 3 days to settle it, should that fall into open interest? Maybe not. Now, Bix does admit in his video that he's not really sure the answer to this. So the funny thing about Bix's criticism of me is he's criticizing me, and pretty heavily if you watch the video, but then he turns around and says, I really don't know the answer to this myself. I have to go ask my friend Ted Butler, and I've got an email out to them. So I find it funny that Bix puts himself off as some sort of expert, openly criticizing me when I've never mentioned his name or addressed him at all. And yet he admits in the same video, almost in the same sentence, he really doesn't know the answer to that. And I think the reason he doesn't know the answer is because none of us know the answer, because it's not in their documentation. It doesn't really say what defines open interest. I mean, open interest says open. It doesn't say how long. So I found another little video here that defines open interest and volume, and I want to address that real quick. Open interest increases when traders open trades, decreases when they close trades, is running lists for open contracts. Volume, on the other hand, increases every time a trade is open or closed. Aha. So if somebody came in on the same day and enacted a same day transaction, open and close a contract in one day, and is taking physical delivery within a couple of days, as per what the COMEX says needs to happen, then we would say, okay, why can't we find this in the volume numbers? So let's go back and look at volume. When we get to volume, we get this nice little chart up here of volume. So, you know, it gives us the total volume. It doesn't break down what is the difference between something delivered in that physical day. And if you go to settlements, I actually want to go back to, I want to go back here to settlements. Here we go to the S's. The CME also defines settlements. Let me get up here to it. Sorry, guys. There's a lot of S's apparently. A settlement is the delivery of cash or commodities in exchange for payment as specified by the terms of underlying contract. So a settlement appears to define what could be a same-day contract, a right on the spot contract where you issue and close that contract on the same day. The problem is if you go to settlements on the CME Group website, they still don't report how many settlements on a given day. Now they'll report the settlement prices. So they'll say, if you're going to close in October, it's 1935.1. If you're going to do in February 22, it's 1970.3. And as would make sense, that price rises over time because there's the time value of potentially that gold price rising. But they don't put the actual settlement, the number of settlements in this chart called settlements. They only put the estimated volume for the day and the prior day open interest. So if you look at settlements, it's the delivery of cash or commodities in exchange for payment, but on the settlements tab, they don't tell you. I guess this is the problem that I have with the CME Group data. And maybe Bix and I both share this, I don't know. They don't report the data in a way which makes sense. And I'm a former auditor, so when I'm looking at the data, I want to go over here and be able to tell, you know, we have so many of these delivered. Like we have 1928 of these delivered, and we only have an 1,888 change in open interest. Where are the settlements called out separately from the open interest or the closed paper contracts? Where is that information? So I believe, again, this is misleading. And the reason why this matters is because the futures price on COMEX determines the price of gold and silver in the market. It's not the TOCOM in Japan. It's not the Shanghai in China. It's not the London market. As we talked about before, those are relatively opaque markets. They don't provide a lot of data, and they don't necessarily, I don't believe they all trade on the Globex. So they're not as available as often as the COMEX is for doing these futures trades or taking delivery. And if you go to the London market, you have to pay $18,000 a year to even get data. And so for those two reasons, because it's on the Globex and because there's more data available, everybody chooses to use the COMEX to determine the price of gold and silver. And I'm talking everybody. I'm talking retail investors. I'm talking anybody making any manufacturer looking at the gold price. So they've got a silver in their televisions or gold in their jewelry or gold in their computers or silver in their medical device. You know, they're going to use this market to determine how to price their gold and silver. And so if they're not giving us accurate data, that's an issue. That's billions of dollars of transactions on a daily, monthly, yearly basis that's not accurately being called out. And as a former auditor, what I want to know is how to tick and tie all these numbers. And if I see numbers here that aren't, that don't appear to be accurate and aren't accurately defining terms, again, let's look at terms. Settlement, but you're not providing the settlement numbers, that's an issue. And so let's say, what is the bigger issue? Is the bigger issue that the deliveries don't match up with the open interest, or that we don't really know how many same-day deliveries were occurring? I think that's the bigger issue, because it doesn't really, there's nothing in any of this data you're going to find at CME Group that really tells you the amount of deliveries occurring, who's doing them, so on and so forth. You can go to the metal delivery, the monthly, the daily, the yearly report. It'll give you bulk numbers, but it doesn't give you details. And again, we don't have that transactional data. So even if Bix is right, and even if Ted Butler comes back to him because Bix admitted he didn't know the answer, and Ted Butler emails him back and says, yes, Bix, you're right, they can settle on the same day, that should be called out in the data. And they should go back and redefine how the data is presented, because the open interest and settlement are different, but they don't give the settlement data up here. And to me, that's an issue. As somebody that follows that market, I want to understand how that works. and they need to better define that, and it needs to be better represented on their website. That's just, you know, my point there. The other thing I wanted to address with Bix is he then goes on a rant and claims that in my article, I did not credit Ted Butler for this. Now, I don't know if Ted Butler is Bix's chosen analyst. Obviously, he's going to email him for the answer about same day open and closing of a contract. But I guess Bix has some sort of relationship with Ted Butler. I don't know. I don't follow either one of them very much. But he claims that I got all of my data from Ted Butler and I'm not properly crediting him. And this is where I get pissed off at Bix. Because first of all, there's no reference to Ted Butler, and Bix is just flat out wrong, and I'm going to prove it here. So first of all, I don't mention Ted Butler anywhere in my article. So we're just going to do a search for Ted Butler. We're just going to do a search for Butler on this page. And as you can see, there's no Butler in here. I didn't mention Ted Butler. I didn't reference Ted Butler's report or his website or anything like that. And I haven't registered for Ted Butler's website. If he has one, I haven't seen him on YouTube other than some interviews with other people. I have occasionally seen him on GoldSeek, but I don't read a lot of his stuff. He wasn't one of my big influences. And no offense to Ted Butler, sure, he's a really smart guy, but he's just not one of my major influencers. And here's where I'm going to prove it, and Bix needs to eat his words. So going back to my article history on Seeking Alpha, I've been writing for Seeking Alpha for over 10 years. You can see the very first article I wrote here is called Gold is Money, Not an Asset, and that was published on August 11th, 2010. At the end of August, I actually did a 5-part series on gold and silver market suppression. The first of this was called Gold and Silver Market Suppression Failures Flashed the Buy Signal, meaning I thought we were going to be in a bull market, which we were in the middle of. And then I did 5 parts to that series. So I have opened the first one in that series, and we're going to do a search for the word Butler, just like we did before, to see if I credited Butler when I wrote this series 10 years ago. So by the way, Bix, I'm not Johnny, new guy on the spot for this market. I've done this before, and I've written about this for 10 years. And I'm going to show you where this was quoted in Gata also. So I didn't include Butler in any of my research. Now, I did include Gata, so I will give Gata credit. Back when I did my research for this series, the first person I went to was Gata.org. And it's Bill Murphy and Adrian Douglas there have done a lot of work. Chris as well has done a lot of work there at Gata. I know Bix, I even think, was associated with them at one point. That's where I really got my influence on the suppression and the games in the gold and silver market. And I wrote about it. And I borrowed a lot of Adrian's data here that he had published. And I went on to do some of my own research about some other stuff that had gone on. So those 5 articles, again, written, the first one, August 31, 2010, as you can see here, all the way up through September 6, 2010. Were done 10 years back. Those are 10 years old. They're in a mainstream financial news site, and they have nothing to do with Ted Butler. I also wanted to point out that Gata on August 31, 2010, printed the first 2 of my articles on their website. And it says here, Gata's work continues to gain recognition and credibility as demonstrated by a series of essays that have begun to be posted at Seeking Alpha by Robert Keynes, that would be me, an auditor, which I was, and a former broker and currency market analyst. The essays are titled Gold and Silver Market Suppression Failures Flash Buy Signal, and you can find the first part at Seeking Alpha here and the second part here. So then if we open that, it links to my second article. So I've been credited for 10 years by Gata of writing these articles. And again, no reference to Ted Butler anywhere. So again, I don't know where Bix thinks that Ted Butler has some sort of monopoly on this. I'm sure if I reached out to Ted Butler, he'd say, hey, there's been a lot of good commentators in this area. There's been Gata, there's been Harvey Organ, there's been Ed Steer, and I'm sure countless other people, Nick Laird, Ronan Manley, many, many others that have been involved in documenting this over time. I don't know where his rant about Ted Butler came from, but I did want to point out that I've also interviewed, and this is my YouTube channel. As you can see right here, I interviewed about a year ago, Bill Murphy from Gata. And this is that particular interview there. I'm just going to put it forward here in the video so we can get a screenshot. That's me and Bill talking. And again, we did another one in 2020, April 2020, a follow-up to this one where we're talking about Gata's data and the manipulation of the markets. And I also wanted to point out on my channel, I've talked with plenty of other people, none of them being Ted Butler. So you can see I've got David Morgan here. He was actually at my conference August 5th and 6th, which I ran online. He was my keynote speaker. I've also talked to Nick Barishev, who knows a lot about the gold and silver market suppression, the fakeness of GLD, so on and so forth. I've talked with, also talked here with Rory from his website as well. And he talks a lot about the suppression, excuse me, a little bit of dry mouth going on here. I've talked with a lot of people. You can see me talking with, who else have I Chris Marcus. I've been on Chris Marcus's channel many times. Here's Chris Marcus on my channel. Chris Marcus wrote the book, The Big Silver Short, which, by the way, I'm one of the editors for that book. And I'm quoted on, I'm given an attribution in Chris's book, The Big Silver Short. And I'm also on the back page. I have a quote basically saying how great the book is on Chris's book. And I was one of the editors. I was one of the few people to actually see Chris's book before it got published on The Big Silver Short. And to be honest with you, if I wanted to outline my biggest influences in the silver market, it's not Ted Butler. More old school would be David Morgan, who I found about 10 years ago. And more recently would be Chris Marcus. They're both big silver guys. And I would credit them more of my knowledge on the silver market than I would Ted Butler. Again, no offense to Ted Butler. Also wanted to point out that not only have I been writing for about 10 years on gold and silver, on August 5th and 7th, I had my very own conference called the North American Monetary Metals Summit, in which I had a lot of people come to it. So here you can see Rob Kirby, Kirby Analytics. David Morgan was my keynote speaker. Of course, I had a session here on the resources. Here was Chris Marcus, Dave Kranzler, Don Durrett, Rafi Farber joining me on a live stream, which we had 40 people show up for that. I had 400 people register for this conference, by the way. It's very popular. A lot of other people that I've talked to, Logan Keynes from Seeking Alpha, Kenneth Amaduri, who I know very well, Florian Grumet from Midas Touch Consulting. I also had some CEOs. I had some sponsors at the conference who paid to be at the conference. So I would do an outline for their companies. So this is Northern Vertex's Ken Berry and David Splett. I've got Stephen Swatton from Mojave Precious Metals. If we want to look at day 2, here is the intervention of precious metals markets video that we did at the conference on August 6th with both Chris Marcus and Stuart Englert. Stuart Englert got his data not from Ted Butler specifically, but from GATA as well. That's why Stuart and I have a really good relationship with each other. Again, here's Nick Beresheff and Rafi Farber. So, as you can see, I ran my own conference about the precious metals, and I plan on doing this every year. This is the first one. I'll run it every single year. I'm going to change the name to the Money Metals Summit. A little bit, it rolls off the tongue a little bit easier, but we'll run this every single year, and I'll have some of the same people back. And again, Ted Butler probably won't be at it because I've never really contacted him about joining that conference. I was also on the Money Show talking about recently at the beginning of September, I think it was like the 3rd or 4th, they had the Money Metals and Mines Summit. I was there talking about resources as well, gold, silver, platinum, palladium, rare earths, and things like that. So I was on that Money Show. So stay tuned to your YouTube channel because you'll see my video come out here probably within a month or two where I gave a presentation on the resources. So I've been on that show. If you want to know where else I've been quoted over the last 10 years, Seeking Alpha, Talk Markets, Mining Feeds, Stockhouse, Gold Eagle, who I write for regularly, by the way. And by the way, on Gold Eagle, I'm one of the panel of 5 or 6 people that predicts the gold price that's on their website. That was a special honor given to me by Eric Volma over there at Gold Eagle. And I appreciate that. He really appreciates my work, and I continue to write articles for them. Of course, I've been writing for FX Empire for several months, as I stated. Dave Kranzler's site, Investment Research Dynamics, Buy Gold and Silver Safely, which is Doug Eberhardt's site, good friend, Arcadia Economics. Been on Chris's channel many times, the Silver Bear Cafe, Silver Doctors. I've been quoted on Zero Hedge, the article I wrote about 9 years ago about the economy. I did a series of charts and put it into a PDF, and that was on Zero Hedge. I've been quoted on APMEX's official site, the precious metals dealer, Oil Voice when I was writing about oil. I've been on GoldSeek. Again, I've been on GATA. I've been on the Daily Coin, Rory's website. Financial Sense, I wrote many articles back in 2010, 2011 timeframe on Financial Sense, technically speaking. So I've been on these different websites over the last 10 years. And again, didn't use Ted Butler's research, had nothing to do with Ted Butler. So I'm not exactly sure why Bix went on that rant about Ted Butler. No disrespect to Ted Butler. I haven't really ever followed him that much. Sure, very smart guy. But none of my work over the last 10 years, which I just showed you, had to do with Ted Butler. Early influences were more going to be Harvey Organ, Ed Steer, and GATA. But now I pretty much do all my own research. So I still follow those other people, but I do all my own research. And my article was based on, my own research and my understanding of the CME group. So just wanted to clear that up. I'm going to post a link to this on Bix's website, after this gets posted tonight. But I just wanted to address that. I don't know what the deal was about Ted Butler, but Ted Butler has nothing to do with anything that I've written. And at that point, I think Bix probably owes me an apology for making an assumption and denigrating something that I wrote without even knowing who I am. And one way you can tell he doesn't know who I am is he mispronounced my last name. He pronounced it Kientz. It's actually Kientz. It's a German name. So I before E in German is long E sound, not long I like American English. So Bix, I would appreciate in the future if you're going to say my name to say it correctly, be Robert Kientz. And if you ever have questions about that, you can reach out to me, robert@goldsilverpros.com, or you can hit me up on YouTube. Be happy to talk to you. And at this point, I'd like to actually invite Bix Weir to my channel. If he wants to debate the fundamentals of the gold and silver market, I'm happy to do so. If he wants to debate my articles on the shadow contracts, I'm happy to do so. If his point is correct in that you can do a same-day settlement and doesn't show up in open interest, I think it strengthens the argument that the CME Group does a crappy job of reporting the data. And actually, that could be a worse issue over the long run than the issue that I pointed out. So we'll stop sharing here. I think this is going to be it for today, everybody. Hope you guys enjoyed this video. Till next time, this is Robert Kientz with goldsilverpros.com.